Hello, everyone. This is Dr. Duru from Ahan Analytics with the market breadth. Okay, big news today. This oversold period is finally over. It ended with an exclamation mark. You can see my favorite technical indicator, the percentage of stocks trading above their 50-day moving averages, what I call AT50 for above the 50, surged 6 percentage points and hit 22%. That's above the threshold of 20% for AT50's oversold reading. This is big news because this was a historically long um, oversold period at 12 days. There are only seven other, I think, historical periods since 1950 that were this long or longer. And I'll show a chart to show the significance of that. Now, the most immediate significance of this is that if a bear market is coming to an end, the end of this kind of oversold period should mark a bottom. But um, because it was so long, I'm very cautious, and you'll also see some technical reasons why I'm very cautious before I call the end. But again, typically, if all is well, the end of the oversold period marks like somehow the whatever caused the big angst is finally fading out in the market's memory, and sellers and fear are getting exhausted. Okay, so that's the significance. Now, there are also some headlines that suggest that this oversold period that we may be able to avoid dropping into oversold right away. So a lot of times in a bear market, oversold periods end and then a new oversold period begins a day or two after. Lots of big headlines today, and you could probably, for instance, Tesla here. Uh, Looks like Tesla may have found its legs now that Musk is promising that he's going to spend cut time spent with Doge, which is the Department of Government Efficiency. Here's another, this is even more important. Trump is claiming that the China tariffs won't stay at 145%, which of course is very prohibitive. And this one is the biggest headline of all that I just saw. This dropped about a little less than an hour ago. Trump has no intention of firing Federal Reserve Chair Jerome Powell. So all of these together suggest that we have the elements for holding the bottom for now. And oh, right. And this is another good one here. I think Besson had a press conference where he claimed that he expected the tariff standoff with China to de-escalate. So all the dots are connecting together now. I hope you can see this. And remember what I said earlier is what I've been saying during this terrible oversold period, and actually a little bit before, is the way that the whole dynamic is supposed to work is when the markets panic, policymakers panic, and then they act, and then the markets rejoice. So usually what happens is that the market falling apart, selling off, collapsing, crashing, what have you, forces action. In this particular case, we have policymakers who are very, very committed to one track. And it's been very hard for the market to move them off of this track. You can see the dots connecting now that are taking policymakers off of this one-way track that they've been on. Now, could they snap back to that track? Of course. So we'll just have to see what happens over time. But again, the dots are connecting. The market crashed, policymakers panic, or you can even say markets panic. Policymakers have panicked, even though they haven't said it, outright. Um, then the policymakers are acting, and then we should see the markets rejoicing. So the start of the rejoicing, I consider today, which is the end of the oversold period. Now, let's go back to why there's reasons still to be cautious, not to go out and go crazy just yet, because here's the chart for the S&P 500. And I put some markers here. One thing to note is that the oversold period started here on April 3rd, and now it's ended on April 22nd. I did a quick calculation. This is a 2% drop over this oversold period. Why is this important? Well, because it matches exactly what I would expect for a 12-day oversold period. So here's a chart that I've been showing in my blog, and I've been putting here on video. This red line, consider this sort of a approximate trend line that maps duration of the oversold period to the S&P 500's percent change over that oversold period. And lo and behold, 12, you can see there were three other oversold periods that lasted 12 days, and 2% down is pretty much right in the middle of that. And in fact, almost right on top of this red line. So when I refresh this chart, we're not even going to see any changes in this trend line, which is pretty amazing. I mean, this nailed the I don't want to call it a prediction, but it nailed the relationship almost to a T. Pretty amazing. That's why I love technicals so much, and that's why I love AT50 as my favorite technical indicator. This is great stuff. All right. Now, why am I still cautious? Well, it's because we still have this steep downtrend from the 20-day moving average, and it has already failed us once. I should say us, failed the S&P 500 once as resistance. And now the buyers have to put in a lot of work to keep pushing higher before even testing that. And even after the S&P 500 breaks through that, there's still going to be stiff resistance to go from the 50-day moving average. Another thing to note is that because all these moving averages are moving down, we would expect that over time, the odds of ending an oversold period should go up. And in fact, this is why I've been saying that the longer an oversold period goes, the more bearish the market gets. It's because it means that this downtrend is really pressing hard on the market, and buyers are just becoming scarcer and scarcer and scarcer. So thank goodness the oversold period finally ended after 12 days, but you can see that there's still plenty of downtrend left for the indices to fight. Okay, NASDAQ. The NASDAQ magically, I insisted in my last blog post I put this on social media that Monday, this is yesterday's drop back into the conventional bear market for the NASDAQ, probably is not going to end as quickly as it did last time. Well, sure enough, it actually ended faster. So last time, I think, let's see, yeah, let's just call this 3 days in bear market territory. And now the NASDAQ only spent one. So if I want to do the positive spin, I'm going to have to flip 180 degrees on my expectation, which is, well, if it spent 3 days before and now only one day, it means that the sellers are losing their power, right? They were able to hold the NASDAQ into conventional bear market territory for 3 days. Now they can only do it for one. The next time the NASDAQ turns down, maybe it bounces right off of that line because we know robots and trading algorithms and technicians are all watching this line like a hawk. So we see evidence now of its importance. Oh, and also note that the NASDAQ, last time hit the 20-day moving average, it had an even more definitive failure than the S&P 500 did. Same thing I said about the S&P 500 applies to the NASDAQ. Even when this downtrend breaks, there's going to be really stiff resistance up here. And of course, there's other resistance levels involved with the initial breakdown below the 200-day moving average, which is that blue line. Okay, let's look at the small caps. Again, not much to say here. I expect it to continue just trading in between the conventional bear market line and the pre-pandemic high. It too needs to struggle with the 20-day moving average, and it's been weaker than the other indices, except for last Friday. But it hasn't even touched the 20-day moving average since before it plunged into bear market territory. Okay, let's take a look at the VIX. The VIX, this is another reason to be slightly cautious. We've entered the oversold period, not only with the S&P 500 down 2% over that time, but also the VIX, the fear index, the volatility index, is not at a new low yet. So I'll feel a little bit more comfortable, not when it's just below its last closing low, but when it's below these intraday lows. So this is something to keep an eye on. And also note that remember, it's still earnings season. So if you are using the AT50 trading rules to buy only after an oversold period ends, this is not a clarion call for buying individual stocks because earnings, of course, can upset any technicals at any time. And always remember that this information is for educational purposes only. Trade and invest according to your own time horizons and risk preferences. Okay. Let me just show Actually, let's just show one of the big cap tech stocks, which is Meta. I'm showing Meta because this is one of the stocks, this uptrend was historical. This buying trend it had, I think it was up 19 days in a row. So I find it very ironic that from here, Meta essentially collapsed. And the reason why I'm showing this is because Meta has been relatively weak. Just as early as yesterday, last Monday, it closed below. It made a new low. All the way going back to August was the last time I saw this price. So even though the oversold period is over, Meta is in a very weak position. Now, if you're bullish on Meta, of course, you could look at this and say, oh, well, I could at least trade all the way up to the 20-day moving average. And sure, that might be something even I try ahead of earnings. Again, I don't want to play any stocks during earnings at this point, just because the risks are still high, the VIX is still high, so that's telling us the risks are high. Okay, and plus we don't know how the market's going to react when companies say, "Hey, the economic chaos and the uncertainty is too much for us. We can't give guidance, or we have to pull back guidance." You don't know how markets are going to react to that kind of thing. Okay, um, let's see. Let's go ahead and take a look at gold. Gold had a bearish engulfing day, so it may have topped out, which is again timely if indeed policymakers are shifting off of their track and doing things that are more dollar positive. You can see here with the euro. The euro indeed may have topped out as well, and the dollar is regaining its footing. More importantly, against the Japanese yen, you could see the surge here in the Japanese yen. These are all happening after market. Again, remember those headlines I showed to you? Most of them happened right after market close. So now we can see the early reaction with the currencies. In other words, the US dollar is on the move and recovering. Okay. Now, the other thing I wanted to show is let's take a look at 3M Company, an industrial company that reported earnings. I think this is today. Yeah, it's today. I like this recovery. It's above the 200-day moving average. This is the kind of stock that I want to put on my buy list because it's already reported earnings and the results were positive, and it made a good technical move, which is closing above the 200-day moving average. Note again that it still has two downtrends to fight against and probably a very tough resistance from a triple top up here. So 3M Company, ticker symbol MMM. I'm going to show Tesla real quick. It reported earnings, and you can see in after hours it's up. So this is the reaction, I guess, to Musk claiming that he's going to spend less time with Doge starting in May. So that's a positive for Tesla. You could see that it held the quote unquote walls bottom. I won't get into what that is, but anyway, this is what I've been watching as a bottom, and it looks like it's going to hold. And let's end it there. There's lots of individual stocks, of course, to look at. Again, remember it's earnings season, so stay on top of those dates when you're trying to trade individual stocks. For me, I personally am focused on the indices. So I put in a trade actually for the QQQs, and it hit my profit target right away. I was quite surprised. I won't go into the trade setup, but just note that I'm going to try to put in the trade again. I mean, I'm not complaining I got a profit, but I actually wanted to stay in QQQ till at least it tests this 20-day moving average. So I'm hoping we don't get too much of a gap up tomorrow, and then it becomes hard to play that. Remember the tariff crash trading plan that I have, which is if I'm all set to buy and the market gaps away from me the next day, then I'm going to try to wait for the market to come in at least halfway into that gap or to pull back at least 50% on its gains for the day before I start making trades. That's worked twice. Hopefully it can work again, but we shall see. All right. Please share and like this content so the algorithms can know about this and bring more viewers who need to see this. If you have questions or comments, you can always put them down below. Otherwise, please subscribe to this channel. You can also check out my blog for more details on my technical and fundamental analysis at drduru.com/122, all letters. Thanks for checking this out and be careful out there.